All right. Well, earlier I mentioned that we did get our new ethanol production update for this week. Let's take a look at what the production numbers were. Did we go up or down? Well, we actually increased just a little bit. We're still hovering just a little over 1 million barrels per day. So we came in this week at 1.036 million barrels per day. That was an increase of 32,000 a day. 4-week average, well, it bumped up by 17,000 barrels to 1.002. Ethanol stocks, well, they were up 600,000 barrels, though, so it's kind of a good news, bad news scenario. There were no imports of ethanol into the U.S. last week. As we take a look at what's going on in the grain trade right now, you know, about half an hour ago, we had the grains just taking a complete nosedive, all of them, for about 10 or 20 minutes there. Corn, they took about a dime off of that thing in a real hurry, and then it bounced up a little bit again. So right now, July corn is now 2 3/4 lower at 605 1/4 after a high of 612 1/2 overnight. December is down 10 1/2 cents now at 530 1/2. That's only a couple of pennies from our low of the day. We're off our overnight high by 12 cents right there in December. Now in soybeans, volatility, just the name of the game today. July now at 13.59 3/4. That's up 6 1/2 cents. But a little bit ago, it got as low as 13.50. Yikes. And then it bounced a dime again. Now you have November down 2 3/4 at 11.82. That's about 6 cents off of its low from a little bit ago. So it's had some nasty gyrations going on in the last half hour or so. Now in the wheat in Chicago, July down 12 1/2 cents at 615 1/4. In Kansas City wheat today, no doubt about which way they're going. We have July down a whopping 26 1/4 at 7.94 per bushel. That's way under $8 now. In Minneapolis, let's go with that July contract. We're down 16 1/2, sitting right at exactly $8 even as we speak. Well, we have Brian Hoops on the line with us. He's the president of Midwest Market Solutions, and he joins us right now. Did you hear anything on the Squawk Box on the wire about a half an hour or 45 minutes ago to explain why everything just fell off the table there for about 10 or 15 minutes?
Yeah, Marlon, good morning. And, nothing really as far as any news that came out. We had the EIA report that you mentioned already. That wasn't necessarily bearish to the market, but it does look like, we ran some sell stops below yesterday's lows, especially in December corn. When we hit those stops, that's kind of when the downhill slide really started, taking us below the 530 area. Some of the weather models overnight added some rain, especially the U.S. model, which is probably the one that's widely followed more by the trade. That's been for several days now been getting wetter and wetter out in that longer term time frame. So it's always hard to judge, and that model's been a little bit more erratic than the European model, which is much drier. And that European model keeps some of the rains farther south and farther to the east and not into the heart of the Corn Belt where that U.S. weather model has. But, the trade is looking at these weather forecasts and looking ahead to Friday's supply and demand report. And there just really isn't anything bullish to come out of that report, I don't think. USDA is very unlikely to make any changes to soybean production. They never have in the June report. In history. So it's unlikely they'll make a change now. They could make some corn changes. I think everybody expects them, if they do make a change, would be for lower yields. But you look at the wheat market, which is plunging today, that is one market I think that you could say production actually has increased since our last supply and demand report. A lot of the Kansas and dry areas, Oklahoma included, have received good rainfall since over the last month, and that could have put some yield back into the wheat crop, and that is, I think, acting as an anchor on that corn market today.
Okay, so in my pea-sized little brain, I'm thinking that the rain kept the yield from getting worse. Does that make sense? Instead of really improving, it's not like we're gaining bushels, it's like we're preventing the loss of more production this year. There just isn't any demand, right?
The problem is just no demand. Even if you have no crop whatsoever, nobody wants it. There's too much world demand out there.
Yeah.
With big crops coming out of Russia, they're increasing their exports. Almost seemingly every report that comes out, Sobicon is increasing the size of the Russian wheat crop and their exports, and that's just a major competing country. When Egypt overnight tendered and ended up purchasing Russian wheat in their tender, only 55,000 metric tons, but still it was Russian wheat and really nothing from the United States for several years now.
And isn't it funny how Russia extended that shipping agreement for a couple of months just to give them time to get their crop shipped out of that area? And then they can, yeah, whatever. Another story. Okay, we'll come back in a moment and we'll talk about our livestock. That's another market that's been on fire lately. We'll talk about cattle right after this. All right, to the livestock trade we go. We start with our live cattle board. Our quotes are from Bar Chart, and well, let's take a look at this August contract on the live cattle. Look at them go, 95 cents higher today at 176.45, although it has hit the skids from its earlier high. We had gotten as high as 178.10 before backing off about $1.70. I mean, that's actually getting to be the norm these days, these just crazy wide swings, and they do it in a hurry, too. October live cattle up 65 at 178.90. One thing I will point out, if you look at the screen, if you're watching at home or on the RFD TV Now app, the nearbys are showing more strength than the deferreds, which is a bullish signal usually. Feeders, they're higher across the board. August is up 60 at 243.85. September 80 higher at 247.32. And so it goes across the board there. So pretty strong gains, but they're off of their highs by about $1.30 right now. So put an asterisk on that. Lean hog trade, we're narrowly mixed. You have June down 27, but most of your action is going to be in July or beyond. July is unchanged at 88.32. August actually 22 higher. So we're all mixed up in the lean hog trade. They don't know what to do today, but the cattle, there's no stopping them the way it appears here, Brian.
They're, been on fire. A real strong bull market, live and feeders both. The cash trade starting to develop a little bit in the northern plains. We're hearing some 193 trade. Last week, I think we were 185 to 188. So we're at least, at least $5 better. And on a dress basis, there's bids out there, 300 right now, that are not being taken by the feedlots. And that's $8 at least, maybe even more in some cases, of a gain compared to last week. And we're going to settle out some really high prices, I think, in the northern plains. The south is still trying to get going. We're hearing a lot of bids up to 182 right now. That's after trade and that much cheaper range, like a 180, 178 to 180. So we're going to be at least $2 higher, but those really haven't been traded yet. But we're going to see a lot of strength in this cash market. That's kept the futures market rallying. We saw like just a small round of profit taking this morning in the cattle futures, and there's probably going to be more coming after the cash trade is developed and kind of subsides. But it seems like packers right now have been anticipating larger numbers coming, and they're not finding them, and that's has sent them scrambling, trying to get some cash inventory.
Okay, wait a minute. I think I need to get my hearing checked. Did I actually hear you say that they offered $300 and they wouldn't take it today?
That's what we're hearing. Yes, on a dress basis, we've started off at like 298. We're up to 300, and a lot of it's being passed so far.
Oh my gosh. Okay.
Yes.
All right. These are crazy times. Well, thank you for the update. I appreciate that. Thank you very much. Brian Hoops of Midwest Market Solutions.